Welcome to Foundations for Your Future, the General Information Program of the Public School Employees Retirement System, PSERS. For many of you, this program will be the starting point in your retirement planning. So if you don't feel you have all the answers after this presentation, don't worry. There are many additional sources of information and steps that we will discuss. We hope this will be a good introduction to get you acquainted with those steps and the ways in which PSERS is available to assist you along the way. This program will provide information to help you better understand the benefits you have as a PSERS member and the important decisions you must make when you retire. Today we will review PSERS, your retirement plan, the member life cycle, including how your account grows as you work and age closer to retirement, your retirement benefit options, the things to consider as you approach retirement, achieving milestones that can have a positive impact on your future benefits, the importance of comparing retirement dates, understanding the decisions you must prepare to make, and finally, some checklists designed to help you stay on target. PSERS is a governmental cost-sharing multiple employer retirement plan to which the public school employers, the Commonwealth, and school employees contribute. Depending on your membership class, you may have a defined benefit, DB plan, a defined contribution, DC plan, or a combination of both DB and DC components. Participating employers include all Pennsylvania public school districts, intermediate units, vocational technical or career technology schools, participating charter schools, community colleges, the state-owned universities, the Pennsylvania State University, and any other employer who offers PSERS as a retirement plan option. Charter schools are considered public schools, but not all participate in PSERS. Charter schools may, but are not required to offer PSERS as a retirement option. If not, they must offer an alternate retirement plan. If you are a member of PSERS and begin employment with a charter school, you should verify that the charter school participates in PSERS. State-owned colleges and universities, the Pennsylvania State University, the 14 state-owned universities and community colleges are required to offer PSERS as one of their retirement options. In addition to the mandatory offering of PSERS and SERS, the State Employees Retirement System, these employers may offer other retirement plans. Your employer should discuss each of the retirement plans they offer with you. PSERS is qualified under Section 401A of the Internal Revenue Service Code. The defined benefit portion of your retirement is not directly dependent on the amount of your contributions and investment earnings. As represented by the pie chart, the sources of PSERS funding from which retirement benefits are paid include member and employer contributions, along with the largest source of funding, investment earnings. Member contribution rates are set by legislation based on your PSERS enrollment date and membership class. The employer contribution rate changes yearly based on system funding requirements. The defined benefit, DB plan, guarantees a lifetime monthly annuity at retirement for members who have met vesting qualifications. The amount of this benefit is determined by a formula which is set by state law and is guaranteed by the Commonwealth of Pennsylvania. In addition to the DB component, Class TG and TH members have a defined contribution, or DC component, which is administered by VOIA. This will be discussed in more detail later in the program. To determine your annual maximum single life annuity, MSLA, PSERS uses this basic formula. Your final average salary, FAS, times your membership class multiplier, times your total years of credited service. Reductions are applied for early retirement, the withdrawal of member contributions and interest, or when selecting an option other than the MSLA at retirement. Let's review each of these components in a bit more detail. First, the final average salary. Generally, the final average salary is the average of a member's highest compensation received during any 3 school years for membership classes TC, TD, TE, or TF, or any 5 school years for membership classes TG and TH. Included in the calculation of your FAS is any extra compensation received for additional duties performed, such as working overtime, coaching, or working as a department head. Payment for unused sick leave, personal leave, or bonuses received due to retiring are not included in the FAS calculation. For school years in which you rendered part-time service, your compensation may be annualized. In other words, the compensation you received for part-time service may be calculated as if you worked full-time, applied against the fractional portion of the service you rendered for the school year. For a termination of employment that occurs before the end of a school year, the partial salary for that year may be used in combination with a proportionate percentage of a prior school year. Next, let's review your membership class multiplier. You were enrolled in one of the 6 membership classes based on when you first became eligible for PSERS membership. If you became a qualifying member of PSERS prior to July 1st, 2011, your membership class is either Class TC or TD. Class TC service has a 2% multiplier, while Class TD has a 2.5% multiplier. If you were hired before July 1, 2001, you had an opportunity to elect Class TD membership to receive the higher multiplier. If you were hired between July 1, 2001 and June 30, 2011, you were automatically enrolled in Class TD. If you were first enrolled on or after July 1 of 2011, you were enrolled in Class TE by default. TE uses a 2% multiplier for all service credit. There was a one-time opportunity to elect Class TF membership with a higher 2.5% multiplier. If you were first enrolled on or after July 1, 2019, you were enrolled in Class TG by default. You had a one-time opportunity to elect Class TH or DC membership. Class TG uses a 1.25% multiplier for all service credit. There was a one-time opportunity to elect Class TH, which uses a 1% multiplier. This formula does not pertain to you if you elected to participate in the DC plan. Finally, let's discuss your years of service. Credited service accrual is based on a school or fiscal year of July 1 to June 30. If you are a salaried or per diem employee, 180 days of service equals 1 full year of credit. If you are hourly, 1,100 hours is typically the amount needed to reach 1 full year of credit. If you work less than the 180 days or 1,100 hours in a qualifying school year, you will receive partial credit for that year. Partial year service credit is calculated by dividing the days or hours worked by 180 for days or 1,100 for hours. Please note that you cannot receive credit for more than 1 year of service in any one school year. As referenced earlier, when you become a member of PSERS, you begin to contribute to the fund. This chart indicates the contribution rates for each membership class. The current employer contribution rate is 33.9%. Your employer is responsible to report your member contributions to PSERS on a monthly basis. Let's review some final average salary calculation examples. This TD member is retiring in June of 2025. In this typical FAS calculation, the member's final 3 school year salaries are the highest 3. These are used to establish this member's final average salary. In this example, our Class TD member will leave employment and retire in December 2024. Although the full 24-25 salary would have been the member's highest, PSERS can only use the portion of this salary that was actually earned through December. To calculate the FAS based on the highest 3 years, PSERS would use the qualifying portion of the 24-25 school year, the full salaries for the 23-24 and 22-23 school years, and then an appropriate portion of salary reported for the 21-22 school year to ensure that 3 full years of wages are considered when calculating this final average salary. This Class TG member will retire in June of 2025. Because of her membership class, PSERS uses the average of this member's highest 5 years of salaries to determine her final average salary. If you are in Class TG, TH, or DC, you will receive all or part of your retirement benefit from the PSERS DC plan. The DC component of your retirement is based on the amount of contributions made by you and your employer. The investment performance on those contributions, and the fees, costs, and expenses deducted from your PSERS DC plan account. Your contributions have the potential to grow based on investment earnings, but are not guaranteed against loss in declining investment markets. Your employer makes contributions to your DC account at a rate of 2% for Class TH and DC, and 2.25% for Class TG members. In addition to mandatory contributions, you may voluntarily contribute on an after-tax basis an additional percentage of your retirement covered compensation to the PSERS DC plan. If you have more than one employer, each employer will withhold after-tax voluntary contributions based on the same after-tax deferral percentage. After-tax voluntary contributions are post-tax contributions, but will enable you to grow assets through earnings that will be tax deferred. Additional information regarding the federal tax treatment of distributions from the PSERS DC plan that includes after-tax voluntary contributions can be found on the FOIA website.